Hello, hello. What's going on, everybody? Welcome to a capital hungry scalping session stream, market analysis stream. It's currently 4:20 a.m. Eastern here, 4:20. Wow, perfect timing. But I woke up in the middle of the night and I could not go back to sleep. So I was like, you know what? Might as well get some water, drink some water, and might as well just do a classic OG stream. By that, for any of the OGs in here, only a few. Some of the streams we used to do during London session used to be like 4 hours long. Sometimes we start like pre-London and run until like 5, 6 a.m. But anyways, we're going to be starting shortly in like 10 minutes. We're going to be looking and doing some market update analysis, understanding US dollar strength coming back into the table, further tapering pricing in, looking like it's coming back to the table, and using that to our advantage to adapt to some scalps during this risk off session for some potential gold scalps, sells, GU sells, Euro USD sells, and UCAD buys. Okay. Yeah, I think there's oh, Raja's stream. I'm gonna probably be a guest tomorrow. I think he's streaming today too, but I'm probably gonna be streaming at the same time. But everybody watches Raja's stream, so we'll probably be dead during that time. Yeah, the reason why I didn't do like London's because I was sleeping. I just woke up. I just woke up and I could not go back to sleep. So I was like, you know what? No point trying to go back to sleep for like another couple hours anyways. Might as well just start the stream here. Make sure you guys stay hydrated. Okay? Alright, so anyways, let's get into it. First things first, we are all manual retail traders here. I don't know how many times I have to say it. None of us are the whales. I know some people like to come in the chat, talk like they're some big market whale, and like, you know what I mean? Like they're making millions of dollars a day or something crazy like that. It's just very highly unlikely. All of us are manual retail traders that have emotions involved and other factors that impact our decision making process, and also have various different personalities that impact our risk adversity, right? So at the end of the day, the market is not about being right or wrong. That's just more personal ego based. To make consistent money out of the market, it's all about really just following good risk management, understanding the game of probabilities, and having good emotional control in terms of keeping out greed and avoiding crashing your accounts. So the best way to do that is to, of course, first have a trading plan, follow that trading plan, follow your risk management plan, focus on your long-term vision rather than short-term satisfactions, and to the best of your ability, follow traits that delay instant gratification. And if you do this, it's the best way to manage and control your emotions. Because in my opinion, at the end of the day, at the end of the day, regardless how much experience you have, you're always going to have emotions at play or something that can be going on in your personal life that can impact your decision making process in the market. So a lot of people do not pay enough attention to trading psychology. A lot of people, main retail traders, don't even pay attention to economics or fundamentals. Never mind trading psychology. Majority of them be just looking at their phone and like looking at the chart on their phone, being like, all right, this looks good, and they just jump in. Like it's just random shit, right? At the end of the day, but for everybody here, I hope you understand that how important the risk management, understanding this is a game of probabilities, having a trading plan, and how important the trading psychology is, okay? Because this is coming from me. I'm not obviously anybody who's making millions of dollars or crazy financial freedom money, but you guys do trust the information I give fundamentally and technically because you see various information play out, whether it's fundamental analysis or technicals or trade ideas. You see it play out with something that I call ahead of time. But at the end of the day, the technicals and fundamentals are very easy to learn. Like for anybody, like you can go out there and back test the technicals and get in the crazy amount of chart hours every day, and also go learn about the macroeconomics or the fundamentals that impact the market, whether it be market sentiment and understanding investor behavior, central bank impact on currencies and financial markets, like anything, times of crisis impact on financial markets, and so forth. All of that just takes time to learn, right? But your trading psychology and changing your mentality and developing that emotional control, that's the hardest part, because that has been ingrained in you your entire life, and you've never really been self-aware enough to realize you have these personality traits that you need to improve, whether it be a lack of patience, a lack of discipline, a lack of consistency. So, or you're a procrastinator, or you're very lazy or laid back or too angry, whatever it may be. We've been ingrained with these various personality traits and emotions through our entire lives, and have never really looked at ourselves and say, hey, I need to improve this. But when you enter trading as a manual trader, you're going to be forced to either improve those poor behavioral traits or suffer continuously losing. Does that make sense to everybody? Like, the market will force you to either, one, be self-aware, look at yourself and say, hey, I'm way too impatient, I'm way too aggressive, I'm way too much of a gambler. And you'll be forced to change those habits to find success, or you will never change those habits and just keep losing. It doesn't matter how much you know fundamentally, it doesn't matter how good your technicals or how good your analysis is. If you still have these extremely poor behavioral traits, you're still going to lose at the end of the day. You know what I mean? So yeah, just keep that in mind. During these streams, we like to share analysis, share trade ideas, and do analysis, but we have to have a realistic approach to the markets, and at the end of the day, stay very adaptive with what's going on right in front of our eyes as we're following the market sentiment, technicals, fundamentals, live headlines, and so forth. You know what I mean? We do have some UK construction PMI data going to be released shortly, but 1 second here. Okay, so yeah, economic events. It's a China national holiday. In about a couple of minutes here, like 2 minutes, 2.5 minutes, we have some UK construction PMI data, which I will watch the live release here in a second. It's in a minute 30, and then we're going to be watching the ADP non-farm employment change at 8:15 a.m. Eastern, which will impact the US dollar and gold in the short term. I'll talk about that after. First, I just want to see this market PMI release here on the construction side for UK. You can see they have the poll a bit lower than the prior, because I was talking about this concept in the private channel, that the construction sector in UK is still relatively lacking. But we're going to see how this data is, and when you're looking at GJ here, it's having a pretty aggressive bounce off 0.200. GU is also bouncing off this medium term zone at 1.356 as well. So I want to see if this data is good and we retest these areas and get some potential buy scalps just with some of the momentum from stronger economic data, or a quick like 10-15 pip buy scalp on GJ. And then after we see this, I'll start doing some analysis on the other pairs and breaking down the other stuff. Hey Jeev, if you are kind, can you make a short analysis like you've done every Q1, Q2 on the 3 months, because your last analysis was only monthly. I don't understand what do you mean? Where? There's too many commas in that question. I don't understand that question, Mr. Heatclef. Okay, so the market PMI is worse. This is what I was expecting and what I was talking to the private channel about. Now, what we have to understand is that this data is still above 50. So when you're looking at PMI data, that's a good thing. But it's below the prior and below the expectations by a pretty large figure when you're looking at changes in PMI data. So this PMI data is pretty poor right now. When we're looking at GJ on the 1 minute time frame, it looks like we're still creating some lower time frame bearish market structure. With this PMI data being poor, if we get a retest of 0.500 and don't break, I'm going to be looking for some potential sell scalps back down to these 0.200 lows. And GU, I'm going to be looking for sell scalps if dollar continues strength and we break below 1.356. But we might get those moves after. So anyways, I want to show you guys something. So this is going to be the chart for the UK PMI data. So this is the max range here. It's only going back 2 years. But anyways, so even though this data report here, let me use like a different color. Even though this data report here is at 52 and is relatively lower, this is still decent economic data. We have to understand that this extreme, first of all, for those of you who don't understand, any PMI figure, regardless from what country it is, US PMI, Euro PMI, manufacturing PMI, construction, services sector, market PMI, regardless of what it is, PMI data is basically an economist's view and grading of a specific sector in a specific country based on whatever metrics, okay? So, for example, the grading number of what is good data or bad data is based on a median point of 50. That's why you see this little median here, okay? 50. Anything that is consistently below 50, whether it's like manufacturing PMI month over month, shows that there's potential economic uncertainty and extreme economic weakness in that sector. Anything above 50 is healthy economic conditions in that sector. That's how PMI data is graded across the board. Okay? Is everybody following along with that so far? Doesn't matter what country, doesn't matter what type of PMI, if it's manufacturing, construction, services, doesn't matter. It's all graded based on that 50 point, okay? So you can see that there were certain periods of time where prior to the pandemic, the construction sector was already lacking within the UK. The construction sector has already been weaker within the UK. And then when you had the actual pandemic crash here, oh, you guys can't see the dates. One sec. Let me fit it properly here. All right, now you guys can see the dates. So prior to the pandemic, the construction sector was already lacking and below that 50 PMI grade. And then obviously with the pandemic, you had this monstrous drop in the construction PMI data and overall economic data across the board. But you can see after that, since then, we have been actually having much stronger economic data with the PMI figures being well above the 50 point, right? So even right now, we're going to have to watch the 0.500 reaction on GJ accordingly. But even though this data, do you guys understand? So even though this current report was worse than forecast and worse than prior, it's still actually good economic data compared to the 2019 period or pandemic period. We're still above that 50 grade. So we have to be very careful of how investors are going to digest this data. Does that make sense to everybody? So that, like, when you're looking at the fundamentals, you can't always just, what I'm trying to explain is, you can't always just look at, oh, it's worse than, like, oh, it's worse than the poll. That means this is bad data. That's not always the case. Have you guys ever noticed sometimes you will look at an economic data release and it's worse than the poll and you think it's bad data, but then it does the opposite impact on the markets? That's because investors are looking at the overall macro data and understanding are we still in a healthy range or not. So you can see, regardless what sector of economic data you're looking at, you're going to see that similar pattern where obviously during the pandemic period and global lockdowns, economic data had a drastic drop, whether it was like retail sales in the short term, manufacturing sector, production, whatever it may be. Job sector, of course, everything had an extreme drop. But ever since we've had economies open back up, more people getting vaccinated, the support of the central banks, and coming out of that pandemic state, economic data across the board has actually been in at much healthier positions. So this construction PMI data, even though this report was a bit poor right now, what we have to understand, it's still above that 50 graded PMI point. Right? For example, let me show you guys the US manufacturing PMI chart, and it's going to look very similar. We'll go to a 20-year max here, okay? This is a 20-year historical max on the US PMI chart. So this was the 2008 financial crash where you go below that 50 grade point. 50 grade being above here is good, below here is very bad. You're having some type of economic crisis or something very bad impacting that sector, right? The only times we've really been below that 50 grade point, besides some minor blips here, are like year 2000, 2008, and obviously 2020. Okay? So you can see that even with the United States ISM manufacturing PMI data, we're still well above the 50 grade point, and you're going to see this common theme across the board. How do you use this information for when you're scalping? Oh, we're just breaking down this report that just came out that we can potentially use to our advantage on scalping GJ. So this UK economic data report came out, and but it had a really neutral output. So it didn't have too much of an impact, but we were looking to see if this data was still going to be good and much better than the Reuters poll than prior, then it would have helped us take some GJ buy scalps. But right now, GJ still looking a bit bearish on the lower time frame, and that data was still above the 50 point, but a little softer. So I'm watching this area of interest right here on GJ, that if we don't break here, that if we don't break above roughly 151.5, that there's potential for some scalps back down to 151.25 and 151.2. So we were just looking at that data release. That's what we were using. Because right now, obviously at 4:30 a.m. Eastern, we had the UK Construction Purchasing Managers Index release. That report get released. So we were just watching that report release, and it was actually a bit worse. It's still above 50, but it's still worse than prior, worse than poll. And current price action on GBPJPY is on the lower time frame. From this order block area here, you can see we're seeing a lot more seller order flow, and overall Japanese yen and US dollar are holding a bit more strength this session. Right? But anyways, now we're going to go back, zoom out, do some intraday analysis, and then come back and start looking for some scalps on gold, GJ, GU, and Euro USD. GJ, we were just talking about the 0.500 sells, talking about this PMI data being a bit worse. But I was also just giving a lesson on understanding the macro information and stuff like that. That's all. You know what I mean? So, nothing crazy. See that? See what I was telling you guys? That construction PMI data was a bit off. We retested 151.5, just a bit below, and then you start making your way back down to these lows. Pretty quick little scalp there. Off the PPL there. Nice little bearish price action and lower time frame market structure. But 4-hour candles closing in 20 minutes. So we'll get some better setups going into pre-New York hours as well. So right now, let's just go do some analysis. Fuck, I wanted to take a scalp buy off the 47 key level because if you guys look to the left here, we've been bouncing off this area hard overall. But anyways, so gold here. Gold on the higher time frames is still bearish, right? And we're seeing a lot more sellers pressure overall as well. When you're looking at the bearish price action here with much stronger aggressive bearish candles, weaker pullbacks when you're looking at the weekly pullbacks, and with potential to break below these lows and dig a bit deeper going back into the 1680s, especially if US dollar continues that strength and we get further tapering confirmed. So what I want to jump into here is understanding some of the recent fundamental points. So it is very early into the start of Q4 here with some of the order flow setups. That's why we've seen some very aggressive pullbacks, like the gold pullback from the lows, the GJ price setup where it spiked down all the way down to 149 daily lows and bounced from there already 200 pips and so forth. But the main sentiment we are following in terms of US dollar movement and dollar pairs is potential strength, which is coming from the fundamental catalyst of the Feds giving further tapering signals, right? So as the Feds go closer to tapering off the stimulus support, we understand that this essentially means a decrease in the US money supply circulating in the markets, like reverse quantitative easing, decrease of asset purchases, decrease of stimulus provided, and so forth, which would lead to a short-term increase in the value of the dollar, so dollar bulls. And you can play those dollar bulls accordingly for GU sells, Euro USD sells, UCAD buys, and gold sells, because we're trading gold against the dollar, XAU USD, and also because fundamentally, whenever you have anything that's going against inflation and combating inflation, you have a decreased demand in gold, and also tapering and interest rate hike talks are bearish impacting factors on gold too. So on the 4-hour time frame as well, you can see that primarily sellers have been in control when you're looking at the bearish market structure. All we need to confirm the drop below this liquidity zone really is stronger US economic labor market data, and we'll be making our way down to 1720s. You can see stronger bearish impulsive moves that are continuously printing lower lows, right? From these lows, you get very aggressive pullbacks, with this being the most aggressive pullback coming at the start of the new quarterly period. But these pullbacks do not break the overall bearish market structure. And as you have continued US dollar strength and stronger rebounding economic data, gold overall over the last few weeks has been continuously making its way to the downside, with potential that once we clear below these order block lows, a lot of easy room to start going down to 1720s and potentially deeper. Now, this is going to depend if the NFP and unemployment data at the end of the week is still good. If that data is still good, then this price action movement on gold still looks very solid. Dude, aren't you from Canada? Yeah, I'm from Canada. Correct. Right? So what I'm pretty much looking at here in terms of breaking down the transactions behind the scenes is every time you're seeing sellers enter the market, push price down to a significant low, at this low being printed, they start to take profit. You have a pullback that goes to relieve them out of them as buyers jump in and the sellers take profit. That creates this pullback that we read technically to go collect more seller order flow from better price points and then continue that pattern continuation with sellers in control right now, as we're seeing an outflow of liquidity on gold for the fundamental reasons stated. That transaction, in my opinion, between sellers pushing the market down, taking profit, collecting further sell orders, alongside the fundamental catalysts that are making gold more bearish in the short term, aka the tapering rumors being priced in to start in November, and the tapering process only going to take 4 to 6 months, and obviously gold being a part of the Fed's asset purchase program and that slowing down, and dollar picking up strength, has made this bearish market structure. Right? But on the intraday time frames, we're in a bit of a shitty range right now. We're starting to get a bit more sellers pressure that we're breaking below, but we really need to break below 47.5 to see safer sells below to see safer continuation drop sells on gold here. We do have some bearish market structure developing from the highs here, as we had a new little low printed. So we do have the potential that the way gold has been behaving in this range, it would not be out of the ordinary to get a bounce up to 1755 before continuing down and breaking the 47 point. That's why I wanted to take a quick scalp off the 47 bounce range to range, but it was playing out as we were giving the GJ sell scalp idea here. Did anybody jump in the GJ 0.500 sell scalp? We're talking about with the weaker UK construction PMI data, retest of 0.500. We're almost, if you did take that scalp, I would secure some partials back at these 1 minute lows just in case we don't break coming into the new 4 hour candle. For you to extend this scalp any further, you would have to have 1 minute candle closures below these lows, okay? So if you don't break below these lows, I would secure some partial positions at this 15-20 pip mark. You know what I mean? Just because at the end of the day, as a scalper, you have to understand you're playing you're playing very tight ranges. No, the quarter points, these are PPLs on GJ. It's following the quarter point theory, but more specific to GJ. It's at 0.200, 0.500, 0.800. Gold, these are higher time frame historical key levels based on yearly, quarterly, and monthly price points of historical significance, which I can't give the full secrets of how these levels are mapped because look at the reactions. Look at the reactions on the key levels. You know what I mean? That's why we got alerts on all the key levels here. No indicators. This is just to this is just an indicator a private member made to map out the PPLs on GJ. I don't use any indicators. GU, we're gonna sell below this zone. GU, we're also going to be looking for sells below here. So you can see US dollars holding strength. The UK PMI data is bad. Lower time frame price action is bearish as well. But safer sells are going to be the break and retest below these current 1 minute lows here at 1.355. This is as long as US dollar continues strength. But that means at 8:15 a.m. Eastern, we're going to need the US ADP private sector employment change report to be strong, and that will bring some short-term dollar strength and further influence the drop on GU below these lows. Euro USD, we've already had the breakout below the intraday lows, but we're gonna look at that in a second. But yeah, anyways, let's go back to gold here. So I just wanted to call out the GJ trade management for people who are in GJ, who took the GJ sells. That's a pretty good 18 pip scalp there. Even if you, like, we're saying if you had a pretty like reasonable entry, it doesn't have to be the tippy tops. You know what I mean? We'll say 15 pips on the low side for that scalp call. and that was using the fundamental data to our advantage of the shittier UK construction PMI. Worse than forecast, worse than prior. Okay, but anyways, okay, so gold. When you're looking at the intraday time frames on gold, even though we're higher time frame bearish, you can see we've had struggles breaking this liquidity zone area across the board. And from this area, you get some pretty aggressive bounces, but the bounces are starting to get significantly smaller and smaller. So it wouldn't be out of the ordinary that if we don't break 1747 and come above 51, gold can still do a deeper pullback to retest some bearish market structure that's being created on the intraday time frames. Then possibly reject this area and continue down. Or the safest sells is below 1747. So on gold, I'd be looking for pullback buys only if we break above 1751, just as we have these aggressive bounces that retest structure and collect more sell orders before continuing down. I'd be looking for high risk, high reward sells at 1755 or safe sells below 1747. The one thing we have that's good to see is stronger bearish price action at the moment, as well as we also have some nice US dollar strength. Okay, so that's the trade ideas I'm looking for on gold. If we don't break these current lows, I'll talk about ADP in a second, and I'll tell you guys why I hate the ADP report so much. I despise it so much. So if we don't break these current lows and then come above 1751, pullback buys will take advantage of from 1751 roughly to 1755. But at 55 area, we're going to start to look for some potential high risk, high reward sells. Or safe sells if we just cleanly break below 47. Red boxes being sell zones I'd be looking for. Green box being the only buy I take advantage of, a pullback buy. Just because as we've seen gold behave here, it's done very aggressive pullbacks as it's been in this higher time frame range. Yeah, that Zypha or Ziffa, that would be ideal. That would be what would be the easiest trade, is just breaking this low finally at 1747 area. And just having this the new 4-hour candle, maybe make a quick upper wick and then just breaking below. But I'm just saying we have to be cautious that if gold doesn't break these lows, it's been in this higher time frame range doing very aggressive pullbacks before coming back down to the lows again, right? So it wouldn't be out of the ordinary that it does that aggressive pullback again, collects some more seller order flow, and then potentially drops. My main bias on gold is still bearish. If you're looking at the higher time frame analysis I was doing, you can just rewind this. Yeah. Okay. Let's zoom in here more just so we can see it even clearer. So if we don't break these lows, like the new 4-hour candle makes a lower wick, we come above 1751 and don't break, then we'll take advantage of some pullback buy scalps, understanding gold's going to do a bit of a pullback because that's the way this precious metal behaves on the intraday time frames. And we'll look for some better risk versus reward sells at around 1755's area. Or we just have the 4-hour create an upper wick, we don't break above 1751, and then we just take the easy sells below 47. But either or, I'm mainly in a sell bias. I was only looking to take advantage of some pullback buys because of how this pair behaves and staying adaptive to the price action and market structure. You know what I mean? I don't think this time we got the volume for that? Hey, you can't say that about a beast like gold. You cannot say that about a beast like gold. Gold did this pullback yesterday at like 1 p.m. Eastern, like late New York session, when you wouldn't think there's volume for that. You know? Okay, so that's what we're looking for. We're just going to let this 4-hour candle close and be patient for that, because the price action is looking nice and bearish on the 4-hour, where we might not get that full pullback. We just get that upper wick and make our way to the downside. But we want to confirm the ADP private sector jobs report is good. Okay, so the reason why I hate the ADP report is because it's labor market data from the private sector, and it's really never accurate to the actual non-farm employment or of course the unemployment data or jobless claims, right? It's really a coin flip, and it can cause some intraday movement and whipsaw movement and have obviously an impact on gold and the US dollar, but it is never a direct indication of the actual NFP to come. It's almost like a little teaser report that's supposed to tell you, hey, NFP is going to be like this, but it's really a coin flip. Now data like non-farm payrolls, which is actually countrywide collected data, as well as unemployment data and jobless claims, that you can have a higher chance of predicting based on market history, patterns, and fundamental impacts to the labor market. But the ADP is a private sector report, right? So it's literally a coin flip. It's almost impossible to predict the ADP, and it's almost impossible to say the ADP is a good indication of the NFP report to come on the following week, or the following couple of days after. Sorry, because it's always the ADP reports on the Wednesday, then you have NFP on the Friday. You know what I mean? So that's why I personally hate the ADP report. Oh, this 30-minute candle is also flipping bearish. So we might get some nice sells when we're looking at the lower time frame here. Maybe just a quick pullback on the new 4-hour to like 1749, and then start to drop below 47 sells on gold and take advantage of US dollar holding strength. Japanese yen, when it opens up at New York session, is also going to open up bullish as well. So we're seeing, in terms of market sentiment, we're seeing an outflow in equity markets overnight when you're seeing some pretty strong intraday drops here on global stock markets overnight, especially from the Eurozone. And US dollar is nice and bullish like we want it on further tapering the price, on further pricing in the tapering confirms. GJ also ran to full target 0.200. Let's give a round of applause for the GJ scalp. Who took the GJ scalp? Yo, I can do polls here. How do I fucking send? Oh. Oh. We're gonna be looking for GJ continuation sells below below 0.200. Subtitles, I'm not sure how. Huh? No, this sucks. Hey, it's okay if you guys think this sucks, but you can always watch this again to see what we called out. We were literally calling 0.500 retest. We're waiting for this 4-hour candle now. So let's go back. We're gonna be looking for some continuation sells on GJ below 0.200, or if we get a pullback to 0.500 again, sells, or a quick upper wick in the break below 0.200 sells. The 4-hour just closed. This is a new 4-hour candle. Vikram, man, you gotta get with the times, Vikram. So very solid bearish 4-hour candle close. Japanese yen is holding strength. UK equity markets are seeing a decline. UK construction PMI data was bad. Either I want this 4-hour to pull back to give us retests of 0.500 sells, or just make an upper wick and then continue down below this area sells that we're just looking at, 151.200. All right. It looks like GJ is going to be making its way down to 150.800 going into New York session. Going back into the order block lows that we bounced from. Okay. It looks like we also might have just made the 4-hour upper wick now and might get the continuation sells very shortly, actually. Pre-New York volumes can be nice going into Asian session close and so forth. Okay, let's check out what gold's doing here on the 4-hour candle before we jump into it. Okay, so very nice bearish 4-hour candle close. This new 4-hour has a minimal lower wick. I would like a little bit of a deeper pullback and then breaks below 47 sells, or clean closures below 1746 impulsive sells. Okay. You can see on the 1-minute time frame, just a bit below the higher time frame key level. We're getting some reactions right roughly here, 1746 on the dot. So if the 4-hour can turn bearish, 1-minute closures below here, then you're for sure going to get an impulsive drop of like 15, 20, 25 pips going down to like 43. Yeah, I'm entering cells of my mama. Yeah. Yes. Okay, GU, we're going to get our potential sells on GU as well. Very solid bearish 4-hour candle close here. We're also below our sell zone around 1.356 area. But we could get, there's high probability. Sorry, I didn't mean to zoom out that much. I'm getting a little pullback. So I'm going to be looking for sells on GU at a double top at 1.357. Or the breaks below 1.355. Okay. Yeah, GJ, just let it cook. Don't sell GJ right away yet. We're probably going to get a little bit of a pullback and a 4-hour upper wick created first. This was just the first trade we called out with the fundamental reasons given behind it and technical reasons. So to summarize, we can see that overnight we saw an outflow of liquidity on the equity markets. This is showing us less investor confidence in the stock markets and more of a risk-off session. We can see the US dollar powering up as well as volatility index holding strength and being bullish. GBPJPY lower time frame price action bearish, showing stronger bearish candles and consecutive bearish candles, minor little bullish consolidation zones and continuations to the downside. We anticipated this break below 151.5. We were looking for the retest of 151.5 and sells, especially if the UK construction PMI data was bad. So we had the retest of 0.500, UK equities weak, UK construction PMI bad, price action bearish, Japanese yen strength. Oh shit, you guys got hit by the alert sound? Let me turn that off here. Oh shit. It's pretty loud, right? Fucking it's supposed to be loud so it gets your attention, so you get alerted like, oh shit, we'll do US 30 analysis in a second. But I'm actually seeing some potential US 30 sells below 34k if we break below with the outflow in equities at the moment. So same thing, you're seeing just some nice lower time frame bearish market structure we're going to map out here. I'm going to be looking for sells actually in these two areas, even at pre-New York hours and New York Stock Exchange open. Either we don't break 34k, pull back to 34,140, sells from this area. GJ reversed. Where's GJ? GJ's at 0.23. It's like 3 pips above at the same price. Vikram, you got issues, Vikram. Or we're just gonna, or instead of a pullback, we're just gonna have clean breaks below 34k flat and continuation sell scalps on US 30. Okay, so gold, no safe breaks below 1746 yet. It looks like we're going to have a little bit of a pullback. Oh, yeah, the only time we're going to be looking for sells on the stock market, Joe, is when we're getting closer and closer to tapering and strong dollar strength. Because then obviously, for example, the reason why we said there's no points looking for sells on US 30 over the last year and a half was because of the fundamental impact of the Federal Reserve literally pumping the markets. You know what I mean? But now the same Federal Reserve who increased the US money supply out of thin air and injected the markets is going to start to do the opposite, where they are going to decrease asset purchases. They're going to taper the stimulus support and so forth, right? So this isn't going to cause a stock market crash, but it is going to cause a stock market correction, or having bears in play for maybe a couple of weeks on the stock market if they do start to taper and get closer to those confirms, right? You can see this if you look at the stock market post 2008. So see here on the 2008 financial crash. So see here you have the financial crash of 2008, right? This was the actual crash. And it wasn't even close to as impulsive as the pandemic. But then as the Federal Reserve starts to pump the stock markets, you have this relatively bullish market structure with very minimal pullbacks for an extended period of time, all the way until 2012, where you don't see a market crash here, but you do see some bearish market structure in a larger correction compared to any other pullback you had in the last years of the pump there, right? This comes from the start of the tapering process. This is the same time gold also starts to turn a lot more bearish on the higher time frame, 2012 period going into 2013. Because tapering has a fundamental bearish impact on gold. And then the next bearish correction you see comes from interest rate hikes into the 2015 period here, when interest rates are increased and you have these larger corrections on the stock market. It's not the size of the crash, but it's still a correction that can extend for weeks or months. Do you understand what I'm saying? Because of the fundamental catalyst of what the Feds are changing. So here, it's a similar idea. This was the 2020 pandemic crash, but then ever since then, when the Feds increased the US money supply and started providing stimulus to the economy, all you had is continued bullish structure with minimal pullbacks. But if the Feds start to confirm tapering, it wouldn't be out of the ordinary to get a deeper correction down. It wouldn't be close to the size of the crash, but it would be a corrective phase on the stock markets as they taper off that stimulus support and then do something similar to what we saw in 2008 repetition. Does that make sense? Yeah, exactly. Looks like we might just get the impulsive sell scalps on US 30 below 34K, as there's still a pretty strong outflow in equities. And it looks like if GJ just made its upper wick here, and we start to break below 0.200 again, there's going to be some continuation sells on GJ as well. Gold is still looking messing around here. The safer sells are going to be below 1746. We're only looking for pullback buys above 1751. Oh yeah, GU setting up here. The break and retest we called below 356 with US dollar strength. 1 second. I'm just going to put the dollar here. Oh yeah, UCAD. I'm looking for UCAD buys above 1.264 here. If dollar continues its strength as well. But anyways, I'll talk about UCAD and Euro USD in a second. I just want to put dollar here on the candle chart so we can look at the price action, because dollar is nice and bullish, but we're coming back up to those previous intraday highs where we might see a pretty solid reaction in this area. But right now, dollar is very nice and bullish. Yen's going to open up nice and bullish as well. Equity markets are seeing a pretty strong outflow. Just in the short term here. No, I use, well, for watching intraday time frames, I use 4 hour, 1 hour, and then for actual scalp entries, price action, and market structure, I watch 1 minute as well. But for doing an overall analysis, we still I go from yearly time frame, 3 month time frame, 1 month, weekly, daily, all the way down to the intraday time frames. But it depends. It depends what type of style you're trading. Yeah, that would be ideal. I was talking about that, Gibson. That's a good question. Gold, the way gold has been behaving in this higher time frame range at these demand zone lows here, it's been doing very aggressive pullbacks, but still maintaining the bearish market structure, right? So in my opinion, gold, if it doesn't break the lows, could easily still do a pullback to even 1755s and still collect sell orders and continue back down deeper. You know what I mean? So what I was looking for is if we break above 1751, that would give me more confirms to take some pullback buys to retest 1755 before better sells down. And the only safe sells is going to be below right now is the 1747. You can start to look for sells here now, but the safest sells is below 1746 1-minute lows here, where we've had some pretty aggressive bounces and rejection. All right. If we don't break these lows, we're going to be taking advantage of a gold pullback in this lower time frame. Nice bearish market structure you guys can see developing. The stock market is seeing an outflow of liquidity, where gold, if it comes above 1751, we're going to take the pullback buys to potentially collect more sell orders from this retest area and then continue down. Because gold has been doing very aggressive pullbacks in this higher time frame range it's been in for the last week, you know? One second, everybody. I just chugged a lot of water and I only woke up like 30 minutes ago, so I need a quick washroom break. Okay, sorry everybody, just had to take a piss. What is tapering and stimulus? Oh, shit, man. Alright, so the GU sells played out for almost 15 pips. But break below the lows and break below 356, sorry, we were talking about. Anybody take the GU sell scalps? Quick 15 pips, 10, 15 pips. Oh, GJ continuation move. Or extending your runners. What's BF? Oh, Battlefield 24. No, man. Yo, I'd probably have so many updates I'd have to do on my Xbox. I haven't played my Xbox in forever. Anybody take the GJ sell scalp 2 0.200 break for a quick 10-13 pips? Nobody took the quick GJ continuation scalp? Yeah, gold's starting to do the pullback, so yeah. That's what I was telling you guys, don't rush the sells here. No, usually I do this stream at 7 a.m. Eastern. Today I just woke up and couldn't go back to sleep. Oh, okay, you guys took it? Good job. So don't forget to secure partials, leave your runners risk-free, follow good risk management. And we're getting some pullbacks here. Euro USD did not give us any pullbacks. UCAD, we didn't do any safe buys yet. US 30 breaking below 34K, but nothing too crazy yet for continuation sells. Yeah, I told you guys don't rush the sells unless we break below 46. Otherwise, when you're looking at the behavior of gold, it's not out of the ordinary that it's going to do a pullback first for the new 4-hour candle. Right? Yeah. Sorry, I didn't get to answer. I didn't get to see everybody's questions. If you guys have any questions, please send it again right now. What is tapering and stimulus? Can you tell it in short, please? Stimulus is when the central bank who dictates the currency value and the flow of the currency, they increase the US money supply out of thin air. They take that money supply and they inject the financial markets, or they support the US economy through their asset purchase program, quantitative easing, bond purchases, so forth, different monetary policy tools. Tapering is the opposite of that. What would be the best time of day to long USD CAD? The markets are always moving. Like, just because, like, obviously you might see a little bit less volume during opposite sessions, but at the end of the day, the markets are moving. Like, for example, US dollar just had very aggressive upside moves through London session. You have to understand, the institutions and whales and market makers who are trading these currencies across the board, they trade everything. They don't just trade like institutions in London or during London session doesn't mean only GBP is being traded. You can see constant exchanging and price changes of these various currencies across the board, from banks changing every single second, with locations of the banks changing every single second. The bid and ask prices changing every single second, too fast for our eyes to even see. This is just as fast as we can see it. For currencies, precious metals, commodities, and so forth across the world, across the board. So there's not a specific best time to long USD CAD. The market is always moving. It's obviously the best time to day trade is during any type of volume session period, whether it be London or New York. No, not of previous. No, I do not look at daily or weekly highs and lows for support and resistance. Sorry, no, I do not. When are the interest rate news for GBP? I think that's later in the week, no? Or that's not this week, is it? How do you deal with losing streaks and having a right analysis but wrong entry? So if your analysis is right and wrong entry, does that mean you are entering early or something, or entering late? Please elaborate a bit more. Yeah, but yeah, this is like, that's why we're not banks. You know what I mean? We don't trade. We don't have the technology, the resources, the employees, the information. We don't have access to that. Majority of retail brokers make most of their money selling order flow information to big banks and hedge funds. So that's why if you do the same shit all retard retail traders do, then it's not good. If you guys want specific information on fundamentals, technicals, and so forth, go to the Capital Hungry YouTube page and check out these playlists. You have 56 previous live trading streams. You have 12 live market update webinars, 33 individual webinars on individual market analysis. You have 20 educational webinars. If you are being stopped out and your analysis is still correct, that means your stop loss is too tight, and you're not actually following your analysis, which is most likely because you're over leveraging. Because it doesn't make sense that your analysis is correct or you're being stopped out. If you're being stopped out, that means your analysis was not correct. That means price came up to an area that made your analysis invalid first, and then maybe moved in the direction after. So that means your analysis is not correct if you're being stopped out first, or your stop loss is too tight in the risk versus reward ratio you're looking to get, which usually comes from over leveraging. But yeah, the YouTube page will teach you a lot if you guys take the time to go study the webinars, educational content, the news Twitter, the Capital Hungry news Twitter, the Capital Hungry Telegram analysis channel. For anything more, you can come join the Capital Hungry private channel. It's a monthly fee. It comes out, it's roughly $3 a day, and you get and we do daily New York trading sessions. We do too much stuff for me to even describe, to be honest. There's way too much in the private channel for me to talk about. Like, it's just, it would take too long to talk about it. There's way too much stuff. News terminal access, like everything. Price monitor, key level price alerts, daily trading sessions, weekly recap webinars, mental reminders, session reminders, the community itself, other members sharing their look at these guys overnight. We got price alerts here. You got members sharing to take advantage of trades, summarizing trades. Other members sharing analysis, like Stefano shared some gold sells to take overnight, and they played out. Sakim shared some GJ sells. Members sharing news headlines, session alerts and reminders. Right? Then you got the news terminal itself. You got the community channel. Members taking advantage of the GJ sells we called live on the stream and ahead of time here. It's just a good time. It's just a good time. And there's way too many webinars that I do. I did a market update webinar last night. We do the live trading session. Look at all these Zoom sessions in a singular week. I probably do 15 webinars a week in Capital Hungry. We do fundamental point analysis, weekly political reports, weekly economic reports, weekend news briefings. Everything's in Capital Hungry. There's too much. There's honestly, look at this. This new member just joined right here, right? When I say there's too much for me to describe, look at this. This guy Sebastian just joined, and he said, "Hey man, I just joined. There's so much information to here. There's too much information here." He's like, "Guys, I'm a beginner. There's way too much information in here. What do I do?" And I was like, "Bro, you have to just start learning. You have to watch the educational webinars and stuff." right? So there's way too much for me to describe. There's too much shit going on in Capital Hungary. It's crazy. It's productive. It's like it keeps your mind going. Instead of looking at memes, looking at nonsense, you're part of a community that's looking at economic news, financial markets, doing analysis, sharing trade ideas, talking about real world shit going on, not fucking TikToks and shit. China is preparing for war against who? I missed that. I feel like I would have heard about China war. Interest rates has both an impact on long term and short term. Yeah, I don't know which war you're talking about. Okay, so we didn't do Euro USD analysis yet. So Euro USD, nice and bearish, also broke below a very strong higher time frame demand zone on the weekly and daily, showing much stronger bearish market structure developing as well. I don't know if we're gonna get a deeper pullback and continuation sells, but I am looking for a pullback at least to this zone. I want it for in terms of New York. If New York can give us a pullback to 156, then I see some nice continuation sells. Otherwise, I don't really see a good sell area as it's free falling right now. You know what I mean? This is a newsroom that's for Capital Hungry private channel members that's connected to a live news terminal. So whatever gets sent in the live news terminal that I pay like 20K a year for gets sent in the news terminal for the private channel members who pay $3 a day for. It's a good deal. It's a good deal that makes me money if I have a lot of members, and it's worth it if I have a lot of members, and it's good for the private channel members obviously as well. But I have a contract with Reuters. Yeah, it's a good investment because I like to use it. We use it a lot. Like we've used it to take trades on live sessions. You know what I mean? It's a good time. The link for all the stuff is in the description, as well as on like it's right there on the layout. You see it like on your YouTube layout at the bottom, the twitter.com, the t.me. If you just search those up and type that in, or if you just check the description, all the links are in the description for like the Twitter, the Capital Hungry website, the Telegram channel, all the shit's there. It should all be there. Don't forget to sign up for Dominion using my referral. In case Raja's watching. I think they're gonna for sure keep extending the debt ceiling. They've never not extended the debt ceiling. I don't think it's gonna cause a recession because the feds have the tools to reverse the money supply and decrease inflation again. You know what I mean? Obviously they're gonna do it at a very slow and steady rate, but so right now we're in quieter market hours. The sells for GU already played out with the break and retest below 1.356 previous lows for roughly 15 pips. Right? Now I'm going to be looking to see if we can get another pullback and continuation move at the exact same price point coming into the new hour. Those aren't bank transactions. Well, it's sort of like bank transactions, but it's just a part of the data terminal I have. You can't use the information. It's just to understand that like we are not banks. We do not trade like banks. You know what I mean? This is just bid and ask price changes from Asian spots only for currencies across the board between all these various banks and institutions across the world. They're constantly exchanging those bid and ask prices. So a lot of people are like, oh, you trade, like the banks trade on a high frequency level, which is all algorithmic based. Majority of bank trading is algorithmic based, but the high frequency trading is literally like within milliseconds, faster than the eye can see, and it's all based on having the strongest computers, huge data centers that are like huge data centers that these banks have, where they pay for the top technology, fastest connections, fastest speed possible, best hardware possible. They pay engineers and teams of people who went to school just to monitor these systems and algorithms. You know what I mean? And these banks are at competition with each other majority of the time, trying to get an edge on each other. You know what I mean? Now, there are a lot of hedge funds that target the retail trading space as a whole, as you have a lot of retail trading brokers make money if they sell order flow information to larger institutions and hedge funds. This is really well known, like in the stock market world, like Robinhood, for example. You guys know Robinhood? You guys know any of these stockbrokers that have zero commissions, like Robinhood on the stock market side? They make majority of their money because they sell their clients' order flow information to hedge funds, right? And then these large hedge funds put that order flow information within their algorithms, right? Within their algorithms, and they target the masses who are all doing stupid, risk fucking terrible trading behavior. You know what I mean? So it's not like brokers are individually targeting you, but if you follow the behavioral patterns and decision patterns of the majority 99% who lose, which is over trading, gambling, over leveraging, not doing analysis, not studying the markets, not back testing, and so forth, then there's a high probability you're also going to be a part of the losers, because the market targets that. Just like a casino, right? So what really sets you apart from the 99% of people that lose is trading psychology, your trading behavior, and your risk management. It's at the end of the day, it's all about probabilities and risk management. Being right or wrong is just an ego booster. When you do analysis and you're right and you also win, it's just a dopamine hit. It's an ego booster. It makes you feel good. But that's not the whole point of trading. The focus in trading is not being right all the time. It's about taking your jabs at the market with a proper risk versus reward ratio that's in the positive, maybe 1 to 3 minimum, 1 to 2 to 1 to 3 minimum risk versus reward, and having the consistency of maybe a 40 to 50% win rate, where your wins are larger than your losses. Over an extended period of time, you are profitable. And you know what I mean? It's just social media and all of these services online, these various signal sellers or people who claim a 90% win rate, or claim that if you follow my account management or copy trading, you'll have 1,000% returns. They make all these claims because they are trying to market and sell a service. Banks trade in contracts. And banks don't trade in like lot sizes in that sense, because they're just directly connected to the liquidity. They're not going through. Liquidity is like cocaine. At the top, it starts the purest. And then as it makes its way down, there's so many fees attached for everybody up the line to make their money, that it's already been touched so many times. And by the time it comes to the retail trader, it's not even as clean as it is at the very top. It's like cocaine when it's first produced is at its cleanest state. Then the producer gives it to the distributor. The distributor may cut it once because he wants to make his margin and make a shit ton of money. Then the distributor takes it down and gives it to the runners, and the runners want to make their cut, so they're going to cut it again. Then the runners gives it to the smaller dealer. The dealer makes his cut on the cocaine. So liquidity is the same way. The liquidity starts from the CBs to the prime of prime banks, to the private banks, down to the main street banks, down to the retail, down to like the retail brokers, down to you. Right? That's how it works. But anyways, a lot of the stuff on social media, what's advertised as very easy, convenient, and quick, is primarily to sell you something and to sell a service, right? That's why in Capital Hungry, there's no promises in Capital Hungry. Like you know what you pay for, what you're gonna get every single week, every single month, and then that's it. I'm not saying, hey, if you join Capital Hungry, I promise 1,000% returns, or we have a 90% win rate, or we get 500 pips a week. You can't make those promises out of the market. It's impossible. But why is that advertised? Because at the end of the day, the masses, they like to buy what is convenient and easy and what brings them shortcuts. For example, in the fitness industry, and I was talking to the private channel about this last night, right? Losing weight, losing fat off your body, if you are fat and you want to lose weight, is simple science. It's thermodynamics. We are working machines as humans who generate watts, heat, energy, right? So losing weight, or when you're gaining fat, it's simply because you're consuming more calories than your body is burning, and it gets stored as fat for excess use, right? Because your body is telling you, what the fuck? Your body is a natural working machine, and it's going, why am I consuming so much fuel but not doing anything? I don't need this fuel, and then it reserves it as fat, right? To lose weight, you have to burn more calories than you intake, or decrease the amount of calories that you intake compared to what you actively burn, right? That's all this simply is. That's it. But what do you see in the fitness industry on social media? You see weight loss teas, weight loss powders, this new weight loss exercise machine that you can just put this band around your stomach and you'll get abs, or this person who's on steroids saying, hey, try my new fitness program, which is guaranteed more results, weight loss results. It's because people don't like to do what is difficult. People don't like to do what is going to take time and discipline. To effectively lose weight or develop muscle, it's going to take consistency, time, discipline, and a lot of work. You're going to have to physically work out, right? But people like to go but our modern society, people naturally gear towards what's easy, convenient, and the path of least resistance. That's why if you can sell shortcuts, even though it's maybe morally and ethically incorrect, if you can sell a shortcut, you're going to make a shit ton of money. Do you understand what I'm saying? So even though putting on muscle is a simple science, or losing fat is a simple science, do you see that simple science shared on social media? No, you don't. What do you see on social media? Oh, try this new weight loss tea. Try this vibrating weight belt. Try this new guaranteed 3-step weight system. Try this, or workout system. Try this 10-minute a day workout. Come try this new fitness plan. Come try my personal training because I got guaranteed results, or whatever it may be. Right? Because if you were trying to sell a service and you went to people and said, hey, you're trying to lose fat, okay, this is going to be extremely mentally and physically difficult. There's going to be a lot of stress and tension on your body. This is going to take you removing a lot of bad habits. You're going to have to completely change your diet. You're going to have to change how you sleep, how you work out, how you exercise. You think the modern society would buy that product? Fuck no. They'd be like, whoa, fuck this. This is a lot of work. So it's the same thing in trading. In trading, we know that there's a guaranteed fact that 90% of people lose. 90% of people lose because their poor behavioral patterns, terrible risk management, and lack of knowledge. But what do you see on social media regarding trading? You see these fake gurus flexing a lifestyle to show you, hey, look how much money I made, when it's all demo profits they're showing and the money's only coming from sales, right? They're guaranteeing you these crazy win rates on signals, or guaranteeing returns if you follow them, or guaranteeing that their course will change your life. They're making all these false promises that are supposed to be fulfilled in a short period of time. They don't tell you the reality of trading, that hey, to be a successful trader, it might take for as long as a doctor went through medical school. It might take for as long as a lawyer went through law school, then had to do the bar exam, then had to get a job and work up in the law field in firms. Or compared to how hard a pro athlete had to train. Nobody's going to tell you that, because if they tell you that, you're going to say, wow, this is harder than I thought. Maybe I don't want to fucking do this. And then you wouldn't buy the person's product or service. Anybody who pays for Capital Hungry, and the people and the 300 members who choose every single month to pay for Capital Hungry, pay because of the content and value given in Capital Hungry and the real expectations. Everybody in Capital Hungry understands this is not an easy game. There's nothing easy about trading. It's going to take a lot of work. It's going to take a lot of effort. You're going to have to study the market. You're going to go through ups and downs. You're going to go through a lot of personal development, psychological development. Right? But at the end of the day, that's just our modern society. Really just wants everything fast, convenient, easily. I guess it came along with the advancements of tech. It's that has always been a concept of people wanting shortcuts, but it got heavily exponentially increased with like the advancements of technology and all these different applications that like dating is all online with Tinder based and using all these applications. Food delivery, and people don't go out to get food or grocery shop anymore. They just order everything. Amazon, you just order everything. You don't even go out to the store anymore or build anything or create anything. You just order it. You know what I mean? Everything is accessible at your fingertips nowadays, where people are just getting lazier and lazier and more dependent on all this. You know what I mean? So you can see this in the trading industry. You can see this in the fitness industry. You can see this across the board everywhere. It's just the way the society is now, you know? But what can we do about it for ourselves to be different? How do we make sure we still have that independence? We still have that willpower. We still have that strength. We still have that responsibility, accountability for ourselves to personally develop and do better. You know what I mean? Yeah. Exactly. Okay. 1 second here. I just got to answer a couple of phone messages. Markets are slowing down here, obviously, as we're going into pre-New York hours. We're probably going to see some more volume come in at 6 to 6:30 a.m. Eastern, and then going into New York session. Just give me a quick break here, because this is going to be potentially running into New York. So we're going to be taking some quick little breathers here. I just need a quick little 5-minute break, because I'm drinking a lot of water. All right, make sure you guys like, subscribe, turn on post notifications. Just give me a second. I'll just be right back. Okay. Okay, so yo. Okay, so right now it's coming to 6 a.m. Eastern. Um, I'm gonna go make some protein oatmeal. It's gonna take me like literally 3 minutes. When I come back, we're gonna do a question and answer period. Whether that's questions about fundamentals, technicals, or you want to send a trading view chart and I'll review analysis, or if we want to go through some analysis on a fresh pair that we don't normally look at, I can do a full fresh breakdown. But just give me 2 minutes. All right, because right now we're just coming to those pre-New York hours, and volume just relatively a bit slower here for the time being. Oh, GJ even gave a 0.200 retest again. GU as well. And we have the hourly candle coming and closing up as well. But I'm just making breakfast. I just woke up a bit ago and I'm going to go to the gym after this. We do this session after the New York stuff is done. And I got to take a shit, yo, to be honest. I got to take my morning shit still. Yes, nice to be here. Don't worry, guys. Just BRB 1 second because the stream's already started the stream like almost an hour and a half ago now, right? We've already... The only trades we executed on were some GJ scalps here highlighted that were called ahead of time with the reasonings given here. GU. And that's it so far. Okay. Now we have the new hourly candle coming up. We might get a deeper pullback here on GJ. I'm just going to go make some protein oatmeal. And then we're going to come back, answer more questions, do more analysis. All right. Intermission over. Anybody take the retest sells? GJ, same trade idea. Retest 0.200 on the dot. I'm back. Come back, guys. Yo, you guys here? Can you hear me? Any of you guys take the retest sells? GU as well, same retest sells like we were talking about. New hourly candle, it did the same thing. Same thing, quick trade, GJ and GU. Gold is just ranging right now. Gold's probably not going to do a significant move until the ADP data. You know what I mean? Euro USD is just dropping continuously. UCAD, we're going to be looking for UCAD buys. But not yet, as we didn't break above this 1 minute price zone. UCAD, as soon as if we get a little bit of a pullback, break above this 1 minute rejection zone, UCAD buys with a continued dollar strength. Okay. Equity markets are still slowly declining. Oh yeah, the US 30 scalp ran 34K below for 70 points. This is what we talked about when we were looking at global equities like a couple of hours ago. Or an hour and a half ago, we were talking about that. Gold, we haven't taken anything yet. Gold's just ranging. We're either going to wait for the break of 1746 or take pullback buys above 51 for better sells at 56. GJ, further continuation sells would be breaks below 151 now. We still got some nice bearish market structure going here. So if we break below 151, that'd be nice continuation sells. GU continuation sells are going to be breaks below these lows to take another 20 pip range down to 1.352. But right now we just had these quick lived scalps that we were called ahead of time. Euro USD, I didn't see any good sell entries as we were just already dropping. We didn't get much of a retest here anywhere. And these sells were over London session, which was called with US dollar strength to the private channel. If we had dollar strength and obviously equity markets decline. Can you show me the next resistance for Shiba, the Shiba coin, those Shiba Inu coins? Shit, man, you're fucked. You guys hear this? Asthma? That's my protein oatmeal. That's how thick it is. You guys hear that? ASMR? You guys hear the ASMR? Yeah, GJ will take further sells if we get 1 minute candle closures now, break below 151. Yeah, protein oatmeal is super thick. All right, yo, anyways, let's do some questions. If anybody wants to share any charts, ask questions about fundamentals or technicals, trading psychology, let's go through that now as we're waiting for some more pre-New York volume to come into play here. Or should we do analysis on a random pair? You guys, we'll let the chat decide. I'm gonna eat my protein oatmeal until I get some questions or because I've already given analysis on GJ, GU, Euro USD. We're waiting for pullbacks. UCAD, we're waiting for the break 264. Gold, we already, like, for any of the analysis, for anything on gold, GJ, GU, Euro USD, UCAD, and US 30, you can just rewind the stream. Yeah, I don't trade the volatility index, but I look at the volatility index here on the right of your screen for information about market sentiment and investor behavior. But I personally don't trade the volatility index. I just look at it for market sentiment information. Oh yeah, we can also see dollar reacting at the previous high, so we have to be cautious about that as well. Okay, so what random pair should we do analysis on? Fine, we'll do a full breakdown on a random pair. Thanks, Vikram. Who told you that? How'd you guess that social media is bad for you? NFP is still gonna be good. AUD USD. Let me delete this poll and make another poll. Where the fuck is that alert? You guys gotta deal with that. I can't see the alert here. Oh, here it is. Oh, I don't even have the alert here. I already got key levels on AUD USD. But let's start from the monthly time frame, shall we? Okay, so we're gonna do a full AUD USD analysis. Let me take one more bite of this oatmeal. It's super chunky, super thick. Thicker than your girlfriend's. I'm just kidding. The majority of you single. Okay. AUD USD, risk currency against safe haven pair. Risk currency being the Australian dollar, safe haven currency and world reserve currency being the US dollar. Let's confirm some fundamental concepts here so we can understand that AUD USD still follows macroeconomics, market structure, as well as dollar correlation very well. Okay, so this is the 2008-2009 financial crash period. This is 2020-2021 pandemic crash period down below. During this period in time, why was AUD USD so bullish? What was the fundamental reason here? And what was the fundamental reason here that AUD USD was so bullish? Hello, chat. You guys heard me. This is a pop quiz. What was the fundamental macroeconomic reason that you had this crash first with the initial fear of the crisis, crash first, and then after that, AUD USD goes so bullish for an extended period of time? Man said coal price skyrocketed makes AUD bullish. Was that a serious answer? I guess that could be one very, very, very small contributing point. Okay, so remember here, you have a financial crash take place, right? When the actual financial crash happens, or when the pandemic happens, you initially have mass market fear. When you have mass market fear, you have an outflow of liquidity and order flow coming out of your risk currencies, which in this situation would be AUD. And you have an inflow of liquidity going into your safe haven currencies, which in this situation would obviously be USD. So when you have the initial crisis, we're just going to summarize it as crisis, right? When you have a crisis state and central banks have not taken action yet, and crisis state means something that's impacting the global, something that's impacting the world, but has a financial market impact, whether it be global or to a specific country. Most of the time, a crisis is more global in terms of the financial market impact, right? So when you have a crisis state and no action has been taken yet to combat this crisis state, order flow follows fear sentiment. Fear sentiment means outflow in risk assets, inflow into safe havens, right? So the initial crash, when mass fear is evident, whether it was the 2008 financial crash or the 2020 pandemic, US dollar picks up strength during that short-term period. Equities weaken, risk assets overall and currencies weaken. Okay, that's in red here. Everybody understands that so far? Step number 1, right? Everybody understand that? In terms of the crisis, it also creates opportunity from the rich, because this initial crisis state brings down something like AUD USD to historical low points. A very common, well-known universal investing principle is buy low and sell high. So if these market makers and institutions who literally dictate the value of the currencies can follow that same logic to get the best returns possible and extend their financial wealth possible, then these low points become the best buy areas possible from an institutional perspective, where they control how deep the low goes, because this sentiment will continue to follow until the central banks take action. Okay, do you understand? Until the central banks come after in the midst of the crisis situation and state, and they say, hey, you know what? This is terrible. We are going to stimulate the economy. Then, until you have that happen, price is going to keep dropping until it becomes to a very strong, favorable low point that is in their best interest to purchase from those lows when they start to support the financial markets and economy. Okay? So from these low points, what happens next that starts to shift us bullish? As you have that crisis situation, what happens that starts to shift us bullish from these low points? One, you have a heavy amount. Well, number one is the central bank now steps in during the crisis state to take action. How does the central bank take action to support the economy and to obviously influence the financial markets? They heavily increase the US money supply. They take that US money supply and they literally inject the financial markets. Whether it's with asset purchase program, quantitative easing, government bond purchases to give the government's money, corporate bond purchases, credit allocation, they increase the US money supply and they flood the markets. So when they start to take action, the US dollar, which had short-term strength only due to market fear, now reverses its movement and gets extremely weak because the supply of the US dollar increases and the demand also decreases. When the Federal Reserve says, okay, we are going to step in and start flooding the economy right now and supporting the economy, for example, during this crisis state, the demand for investors and smart money is in safe haven currencies, is in safe havens overall, and the demand is removed from risk assets and risk currencies, right? But when the Federal Reserve now steps in and they say we're going to increase the US money supply and support the economy and literally inject and inflate the markets, right? Number one, it's easy to understand the US money supply increases. Whenever you have a higher supply of something, the value of it drops. But number two, where does the demand go as soon as the central bank says they're going to support the economy? The demand goes back into the risk assets and risk currencies, which were brought down to favorable historical low points. Whether it's the stock market from lows, whether it's a commodity from the lows like oil, whether it's these risk currencies against safe haven pairs from the lows. Do you understand? So the demand heavily comes out of dollar, comes out of the Japanese yen. The demand goes back for investors and smart money. The demand goes back into the risk assets and risk currencies. US dollar heavily deflates in value. And because it's the world's reserve currency and holds so much power, you have this heavy inflation in price. Does that make sense to everybody so far? So the reason why AUD USD has been so extremely bullish for this extended period of time and is potentially starting to show us bearish market structure being created now is 100% because of the Federal Reserve's policy positioning and how they stimulated the US economy, but more importantly, flooded the financial markets through their asset purchase program and deflated the value of the dollar. So over the last year and a half, inflation has gone up, the cost of goods for US citizens has gone up, and the buying power of the dollar has gone down. But now, as the Feds can come into a potential tapering stance, right? You can see we did not break this historical price point of interest. We had a very strong range and order block formed here as well, and we're starting to get some stronger bearish price action on the monthly time frame with US dollar strength starting to come back into the scene. So as now we have the reverse happening, as AUD USD comes to a favorable historical high point after having a year, 2 years worth of financial gains from these lows in the billions and billions of dollars, US dollar came down to a very higher time frame low point of interest, and now you're having a potential shift in structure because the Feds are doing what now? What are the Feds starting to do now that's bringing dollar strength back to the table? Remember, dollar was weak here during this whole entire time period because of the stimulus, the asset purchase program, the quantitative easing. What have they been starting to signal the Federal Reserve over the last couple of months that's brought dollar strength back into the scene? Yes, the tapering of the stimulus support. And you can see the fundamental impact and how it prints the technicals on the higher time frames or the intraday time frames. Okay? So now when we're looking at AUD USD, we're actually starting to enter a bit of a stronger bear market here. And this is going to be especially the case if we have continued tapering confirmed by the Federal Reserve. How we get more signals that the Feds are getting closer to tapering is going to come from the economic data, especially in the labor market. If labor market data and overall economic data in the US continues to rebound, more people get vaccinated, the US does not go back into lockdowns, then what you're going to start to see is AUD USD start to make its way back to the downside, going back into low points down to 0.66. Looking at these areas of interest on the higher time frame, right? So you can see this more evident on the weekly as well, with the potential repetition we can get in this area. Very strong rejection at the same historical supply points at 0.8 flat, right? You had some bullish market structure for an extended period of time, but you start to break that bullish market structure, and then you start to create some stronger bearish market structure that follows. This is something that we're starting to see here with the technical repetition as well. Okay? When we're looking at the price action here, you can see we had a very aggressive pullback from these low points, but it still didn't break that last low point price sensitivity area, and we're just creating some more refined bearish market structure. So as long as AUD USD stays below 0.73 and dollar continues strength, there's strong potential for us to make our way down back to these weekly lows at 0.71. Okay? Now when we're further zooming down the time frames alongside higher time frame key levels, you can see this bearish market structure intact. And right now we're in a liquidity zone. Okay? So if I was trading AUD USD on the intraday time frames, if we don't break these lows, 0.733 sells. Break below 7,200, sells. Break below 709, sells. All right. So that's an AUD USD analysis, looking at the monthly fundamental repetition, understanding the impact from the central bank's perspective, understanding market sentiment, and that's what I would be looking for. If we don't break this low, if we don't come to these lows, pull back to 733, I'd still be looking for sells. Breaks below 7.2 sells, breaks below 7.1 sells. Okay, so that was some AUD USD analysis. You guys want me to do another pair, or should we look for some more scalps now as we're coming into pre-New York hours? What do you guys want? We had some short-lived scalps here, short-lived scalps here. Now coming into pre-New York hours, we're just doing some deeper pullbacks. GJ, we're probably going to get a deeper pullback above 151.500 as well. Somebody said Euro AUD. All right, should we take some more scalps? You need a 3-month swing? We're getting a lot of mixed answers. What should we do here? Right now, we're just gonna see GJ, GU, UCAD, and UCAD as well. Just do a bit of pullbacks before continuing back down. You know what I mean? So it's up to them. Should we go back to scalps? GJ next set of scalps is below 151. Otherwise, we're waiting for a 0.500. Or otherwise, we can take a pullback above 0.200 for better sells at 0.500. We're either going to do this, or we're just going to sell below 151. Yeah, I'm still eating protein oatmeal here. We've already called like 5 scalps, I think, because we've been going this session's been going for like 2 hours already. You know what I mean? So I'm just like we've actually done a lot of analysis if you guys rewind and watch it as well, for anybody new coming in. For scalps, we enter on the 1 minute time frame. For intraday trades, you can still enter on the 1 minute time frame, but you're still waiting for more intraday candle closures like on the 1 hour and so forth. US 30, we took a scalp earlier as equities were having a sell-off. It was a risk-off session. We had bearish price action and a break below 34K flat for 70 points. But now as we're coming up to pre-New York hours, I'm pretty much looking for a US 30 pullback to like 34,100 in continuation down, or staying below 34K coming down to 33,800. Yeah. So we took those scalps based on the lower time frame price action, as well as understanding fundamentally it's a risk off session, and we were seeing an outflow of equity on equities across the board, like China, UK markets overnight, Dow Jones, Japan, Germany. Volatility index was holding more strength. Dollar was holding more strength as a safe haven currency as well. So we took those short-lived scalps. But now I'm looking for if US 30 during New York Stock Exchange open can do a pullback and then continuation below 34K in this fashion. And we're going to be taking some further sells. But now we're coming up to pre-New York hours, so I'm expecting some minor pullbacks before we continue. We did gold analysis. If you just rewind the stream, I think the DVR option's on. Mr. Gohans, you can just rewind this stream. I forget exactly what time we did the gold analysis at. Maybe one of the people in the chat can tell you. I think it was a 30 minutes in. I'm not sure exactly. What the fuck is Johnson want? UK PM Johnson says we are embarking on a chance of direction in the UK economy. Says we are going to deal with the long-term structural weaknesses in our economy. He's not really saying too much. I don't think it's having an impact on GBP here yet. Do I have any pets? No, I don't. I don't own any pets. I would actually love a dog, but I do not have any pets. Why did the stream start earlier than normal? Because I woke up in the middle of the night and I couldn't go back to sleep. So I was like, you know what? Let's do a OG 3 to 4 hour long stream. If you guys were here early, we already actually took so many GJ scalps. Like we used the week, like you can see the confirms we took in the analysis we took here, and you can rewind the stream as well to watch it. To watch how we called it live. But yo, watch GBP for a second, because we got fucking Boris Johnson giving a little speech here. UK PM Johnson says we are going to be high wage, high skill, and low tax economy. What a liar. What a fucking liar. What a liar. Is an election coming up in the UK or something? This guy's looking to get re-elected. Man says we are going to be a high wage, high skill, but low tax economy. Yeah, right. Yeah, right, Boris. What a liar. Is there an election coming up again soon or something? Man's trying to get some votes right now. Let's see if this brings GBP any strength from his comments. It doesn't look like it so far. It seems like Boris Johnson was in GBPJPY last night, and he's trying to get he's trying to come back to break even. He's maybe Boris is like 50 pips in drawdown on some GBPJPY. He's trying to bring price back to his break even. You know what I mean? He's like, fuck yo, let me talk about how good we are in the UK. Mm. My laugh is annoying. Yeah, it's a laugh. What do you want it to? What do you want it to sound like? A fucking? Do you want it to give you an orgasm in your ears? Fucking weirdo. I think they're increasing the minimum wage by some cents, I heard. I'm not sure. But the increase in minimum wage does not line up with the increase in inflation. So does Canada still pay tax to the UK? No, I don't think so. That'd be fucked up. Minimum wage is $4 in your country? Holy. Do I stream every day on YouTube? No, I stream 3 days a week on YouTube. We do a Monday market update webinar. This is the YouTube stream schedule. Monday market update for trade ideas at 7 p.m. Eastern, which like obviously already passed. A scalping session today, which is supposed to start at 7 a.m., but I woke up in the middle of the night and couldn't go back to sleep. So we started at like 4:30 a.m. And then a Friday self-development live video so you guys can get biceps like me and stop jerking your dick on Pornhub 3 hours a day. No, I'm kidding, but they're actually pretty useful videos, the Friday self-development live videos. I know some of you guys just be jerking it for no reason. Come on, don't even lie right now. Go to the gym instead. Gold, nice 1751 rejection. Obviously, we didn't call any sells there. We're looking for sells below 1746 on gold, or if we retest 1756. GJ is just ranging right now. Boris Johnson was trying to boost his GJ buys. It doesn't seem like it worked yet, but we might still get a pullback to 0.500. This is what I was... Vikram said Pornhub's banned in India. Luckily. You kill me, Vikram. What do you use instead? Vikram, we know you use a VPN. You just say you're in Tokyo and you go on. Yeah, we're just gonna wait now for some volume to come in. We use some of that late London volume pretty nice. We're just gonna see if we're gonna get a deeper pullback. We'll take advantage of some of the pullback buys for better sells at 151.500 again. No, I'm probably gonna go to the gym after the stream. That's a good question, 44x. The reason why is with the amount of rejections we're getting at the lows, I'm anticipating that going into pre-New York hours, we have the potential we can do a higher probability of a deeper pullback before continuing down when you're looking at the intraday time frames and price action here. So you're looking at the intraday time frames here. We've had a very strong drop overnight just to set up for pre-New York hours. It wouldn't be out of the ordinary to get a bit of a pullback before continuing back down. But I'm going to be seeing how this hourly candle closes to confirm that. Because if the hourly candle still closes below 151.200, then I'm going to bring that sell idea back where we can take another 0.200 retest sell instead. No, the broker's not hunting you down, Mr. Brexit. It's just you. The broker's not going after you, man. So I'm mainly going to confirm if we're going to get a deeper pullback or not, depending how this hourly candle closes. If this hourly candle closes bullish above 0.200 in the next 10 minutes, then we're going to get a deeper pullback and get further sell orders in from like 0.500. Otherwise, if it closes bearish below, then we can still take the same rejection sell at 0.200 again. Like the breakout sell here, the retest sell here, and the same thing on the new hourly candle. Where you either get the breakout entries or the retest with weaker bullish candles, bearish candles coming into play. And you grab your scalp piece and continue on with your day. GU, we're going to be looking to sell at the exact same price point and zone that we used for these two sells earlier. Just this volume and volatility slowing down, which is going to be below here. Or if we come up to 1.359, better retest sells. We're still in a sell bias though, as dollar's holding strength. We're just going to have to confirm that dollar strength with the ADP data at 8:15 a.m. Eastern. ADP is not going to have the largest impact, but obviously it's still something investors are going to use for intraday volatility. Yeah, if you guys want to send charts, you can just send the TradingView code, and then I'll put it in and check out your chart. No worries. We're just chilling here. We're just waiting for some more volume to come in to extend some trade ideas here. And waiting for the economic data as well. I was just reading some of these news headlines. Sorry, I was just catching up in the news terminal. Yeah, go make some breakfast, yo. I'm chilling here. We're just, as soon as we get like the volume and more trade set up going into pre-New York hours, then we're gonna call out some more scalps. But right now we're just waiting, you know what I mean? I don't understand fundamentally how dollar isn't weak given their debt ceiling. The debt ceiling is a fucking illusion. It's a mirage. It's a fugazi. It's a fugazi. It doesn't exist. It's just a fucking... You know what I mean? The debt ceiling is just political propaganda and media for media attention and political nonsense between the Republicans and the Democrats all the time. Have you seen the U.S. Have you seen the U.S. debt? Someone send me that link. The debt clock. I'll open it up. U.S. debt's been increasing forever. If they remove the ceiling, They don't necessarily have to really print more money. Enough exponential money has been printed. You know what I mean? 44x. Do you see what I was talking about? About the potential for a deeper pullback above 0.200 if the hourly closes above. So this is what we might see when I was talking about pullback to 151.5 buys or the sells below 151. So yeah, let's see how this. So we're gonna confirm in another 5 minutes with how this hourly candle closes. If it closes a bit more bullish above 0.200, then I can see the potential for us to get a pullback to 0.500 and then more sells down. But we're gonna confirm how this hourly candle closes in another 4 minutes. Yeah, money is the biggest illusion in the world. Like money is the biggest. It's really not like it's just imaginary. These central banks and these people who run the world literally just dictate the value, the flow of it. It's just it's crazy. We all just trust in it, so that's why it works. Yeah, for sure. Oh yeah, we're gonna keep this stream running probably until ADP for sure. Another hour, 15 minutes. Because gold is a lot more rare than silver. And silver's cheaper. So ADP, last prior report was 374K. The expectations is 428K. If we get an ADP that's like 450K, 500K still, then US dollar is going to be very strong through the New York session. And especially if initial jobless claims on Thursday further supports that. Right? So this is the main meat and potatoes we're waiting for in terms of continued dollar movement, as well as for if we get 450K, then we should get some nice gold sells at like 815, 830. We should get some nice GU continuation sells, Euro USD sells, UCAD buys above 1.26, 1.2645 as well. Euro USD looks like it's just doing a free-for-all. I really wanted to pull back on Euro USD myself too for some sells, but it looks like it's just dropping pretty strongly. So I don't even know if it's gonna give us a pullback. Yo, what's the link shit again? TradingView what? Oh, here we go. I got it. Okay, what pair is this? GJ? Yo, come on, man. Yo, how do you see this? How come your font's the same color as the screen? You're looking for a GJ buys to retest 0.500. This makes sense if this hourly candle closes bullish above 0.200. The new hourly candle makes a bit of a lower wick. Then we do something in this fashion for that pullback buys. Okay. So in the next minute, if this hourly candle closes bullish, next hourly candle makes a lower wick and holds above 0.200, then you can take those potential pullback buys up to 151.4. Okay. But other than that, we're mainly in the sell side bias on GJ so far. Okay, so this is the new hourly candle. So you can see we had a bullish close above 0.200. If this hourly candle shows us weaker lower time frame price action and failure to break 0.200, then we do have the potential to get a bit of a pullback before continuing back down. But we want to be very cautious here as we're still mainly on the sell bias. I'm more looking to play just the GJ sells. So I'm either waiting for the sells at the retest of 151.5, or if we break and retest below 151.2, or 151 sells. Personally, we called this pullback, but I don't want to take the pullback buys. I want to stick to the sell bias we were playing. In GBPUSD, we're going to look for sells at 1.36 retest or back below 356. Price update. Euro USD, we're looking for sells at a retest of 1.157. Gold's doing the deeper pullback as well. Yeah, we've been watching dollar all night. We've been playing the dollar strike to our advantage, but dollar's giving us a pullback at these intraday highs printed. So we have to watch this accordingly to make sure that we might get a pullback from these highs, which is normal, but we got to make sure we get more buyers in the market, and that's going to come if the ADP data is still good to break above here and continue back up. You know what I mean? I don't know what Boris Johnson's talking shit about, but but yeah, we're sticking to our GJ bearish bias, GU bearish bias, Euro USD bearish bias, just waiting for continuation points. Oh yeah, UCAD, if we come down to these lows, fail to break again, and then come back above 2645 buys or breakout retest buys 2645. Scalping, taking them scalps. Yeah, let me go put this away quickly. I'll be back in 1 minute here. Fill up my water bottle. Make sure you guys stay hydrated, stay focused, stay alert. All right. Okay. All right, so still pretty slow volume here right now. Gold's just doing a bit of a pullback. Same thing with GJ and GU here. So we're still going to be waiting for those same price points of interest for entries for any further scalps as we're coming into New York Open in the next hour. And we're waiting for the ADP data here. Do you believe the feds are suppressing and manipulating gold? What do you mean suppressing? Like, I'm not sure what you mean by that. Gold hit all-time highs like just like during the pandemic period. Hit like 2,100 an ounce. Yeah, this is what we're waiting for. ADP, national employment, private employment sector. It looks like it's going to be a good report. React to what? Valuetainment? Fiscal flows slowed a couple months ago. Less private savings to speculate with. That simple. What are you talking about? I said if you want to take the if you're talking about overall market sentiment and dollar movement, yeah, but looking at daily treasury statements, how do you use that for your investing? Can you explain so I can further understand how looking at daily treasury, send a daily treasury statement and explain to me how you use it for your investing? No, gold price is pretty accurate. Oh. I'll check this guy out in my free time then, see what he talks about. Valuetainment. Anyways, I'm mainly in a GJ sell bias. We were talking about the potential for a pullback from 0.200, but I'm still looking for the better sells from 0.500 or back below 0.200 again, or below 151. You don't have to really keep track of that. You can just understand the Federal Reserve has been pumping the economy for the last year and a half. And that really doesn't have anything to do with the treasury statements. Like you could get that same information from knowing the feds are going to taper. Because it goes from the feds first, then to the treasury, then to the markets, and so forth, and into the economy. So if you just understand that the feds were the ones supporting the economy, for the last year and a half and kept stimulus active, you don't really have to look at treasury statements. You can just understand that. And then if you understand that when the Federal Reserve starts to taper stimulus support, it's going to have the reverse impact. You know what I mean? So that's just what I understand. Because it goes from the Federal Reserve to the Treasury, then into the economy at the end of the day. I'm not talking about just the Fed purchases. I'm talking about, yeah, but the government gets their spending and it's through the government bond purchases. That's where they get their spending money from the Fed at the end of the day. One-minute candles we use for reading price action. I don't understand the currency? Okay, so maybe you can educate us then. I don't understand the US dollar, so you can teach us how the US dollar works then. Apparently it's not the Federal Reserve that dictates the value of the dollar. It's the Treasury. My mistake. Just let us know and educate us then. No, what you're saying, you've said a bunch of statements that aren't even relevant to each other just to try and sound smart. Nobody's even talking about what the feds are trading to the treasuries or so forth. I'm talking about dictating the dollar value. What are you talking about? Like, what are you talking about? Yeah. I don't think you understand how the dollar works. If you want, there's a full there's a full webinar here. You can go watch right here. The government doesn't borrow from the Fed, apparently. No, we think you're confused. This guy said, don't wrestle with pigs. You'll both get dirty, but they'll like it. Damn, that's deep. Yeah, but the Fed, where does the US dollar come from? Does it come from the Treasury and government, or does it come from the Federal Reserve? Where does the US dollar come from? Was it the Treasury who increased the US money supply or cut interest rates? Was it them who do that? Was it them? So then who dictates the currency value right off the bat? The supply of it. It's not the Treasury, is it? No, the Fed. Yes, but where's this start from? Because the Fed at the end of the day is privatized. It's not owned by the government. The Fed is not owned by the government or an agent of the government. It works with the government, but is not an agent of the government. It's not owned by the government at all. You can literally just search that up. No, you're confused, bro. With your logic, with all the logic you're saying, right? With all the logic you're saying, why does the Fed even exist then? Why doesn't this all just get handled in-house by the Treasury? The creation of the dollar, the monetary policy, the spending of the government spending, why isn't it all just within one entity then? Answer that question then. Why does the Fed even exist? What's it there for? It's just a placeholder? Why is it even there? Why is it even there? Why is the Fed even there? Why are the central banks who have the monopoly of currency even there? Why isn't, if everything's government run, controlled by the government, why isn't it all just in-house within the government? Why does the Treasury handle all of monetary policy positioning or handling of the monetary policy tools? Why don't they just do that themselves? You keep saying shit to distract people because you cannot answer the core questions. Now you said something completely off topic. The Federal Reserve dictates credit allocation, dictates currency flow, dictates currency supply, dictates interest rates. Why doesn't the government do all of this with your logic? The separation was for the purposes of giving a private market check on money issuance when we were on the gold standard. No, bro, you're just wrong. You keep trying to say things to sound smart, but it feels bad. You can't even answer the basic questions I asked you. Yeah, what do you even see? You can't, just because you're trying to sound smart doesn't mean you're actually going to be smart when you get asked questions. You know what I mean? Yeah. No, I'm not gonna roast the guy. He just thinks he just thinks he understands what he's saying, but he literally has it all in reverse. And with his logic, the Federal Reserve shouldn't even exist. It's not even needed there. It has no purpose at all. Everything's controlled by the government in his eyes. GJ's also doing the pullback we were talking about for the new 44x. Do you see what I was talking about here? Now let's see if we come up to 0.500. Man said it's super furious. Like I said, no, you didn't answer it. Why is the Fed even there? Well, how come the Fed dictates the currency flow, dictates the monetary policy? Why isn't it all done by the Treasury? Why isn't it all done by the government? Because you don't have an answer for that. Because it goes against your thinking. So you just say some stupid shit instead. You didn't answer anything. You talked about member bank shares. Had nothing to do with what I was asking you at the core. I wasn't talking about member bank shares. I wasn't talking about government spending. You were talking about dollar value, which is directly correlated to the Federal Reserve. I don't watch Schiff. I've learned this myself with how a fucking central bank works. Do you know anything about how the Bank of Japan post-war era, same thing as the Fed, so it's the same shit. It's all the same shit. You gotta pay more attention to how the actual central banks work. Why do the central banks even exist? GJ, we were talking about the pullback, 41 minutes or something like that. Almost making its way to 0.500 retest. We'll watch here, or below 151. Let's see how this goes. Yeah, it's looking pretty good. You just keep saying extremely man said you should break out of the libertarian bullshit and read some modern academic work. You still haven't explained anything. You still can't explain anything. You still can't show how you use it for investing. You still can't. I think you're the one who's been lied to, thinking the government controls everything. I think you got it a little bit reversed there, man. That's crazy. Some people are just delusional. This guy's on something, yo. The government doesn't borrow from the Fed? Come on. The government doesn't borrow from the Fed. This guy's lost. So what is the Fed an agent of? Explain that. What's the Fed an agent of? The Fed doesn't print the currency, doesn't control the currency. What is the Fed the government's agent of what? Agent of what? Agent for what? Explain that. What is it? The Federal Reserve is the agent for what? For what? The Federal Reserve is the agent of what? For what? First thing we have to watch is reaction at this price points of area. If GJ breaks above here, then you're gonna have the continuation move up to 151.5. Otherwise, we're coming back below 151.200 and 151. Because we can't anticipate how deep that new hourly pullback was gonna be. No, the currency has power due to the global trust behind it, just like any currency. A currency only has value and power due to societal trust in it. These currencies are no longer backed by anything. They're no longer supported by anything. They're printed literally out of thin air, you meathead. The US dollar is not backed by anything. It's not given value by Congress, because what value is it given? Supported by what? It's literally printed out of thin air. It's literally imaginary. All of global currencies' values in the modern society is primarily due to global trust. It's all a trust system. Jeez. This guy's crazy backwards. I actually feel a little bit bad for you. You can't answer anything. What is the Federal Reserve an agent for the government? That's number one. What are they an agent for? An agent for what? And number two, how does the Treasury dictate the value of the dollar? The supply and the demand of the dollar is what dictates the value of the dollar, as well as the global trust in the currency systems. The value story begins with, oh my god, this guy's so fucking lost. Now man's talking about taxes. This guy's crazy. Oh yo, gold pulled up all the way to 56. Retesting on the dot. Someone's like, oh, trend line. Yeah, just local taxes. That's it. Just taxes. Nothing to do with supply and demand. Nothing to do with fucking... Okay, and who is the issuer? What? Actually, you know what? You know what? Wait, you know what? To prove everything you just said wrong, you know what? What the fuck does this say? Federal Reserve Note. Federal Reserve Note. Federal Reserve, not U.S. Treasury note, not U.S. government note. Federal Reserve Note. That means this was issued, printed by the Federal Reserve. An agent of the government for what? The Federal Reserve is just a printer? That's it? No. It's the Federal Reserve. If your logic was correct and the Treasury is the issuer, why would it not say U.S. Treasury note? U.S. government note? Sorry, buddy. Sorry, buddy. Federal Reserve note on every American dollar. Checkmate. Simple logic. Simple logic. Why does it not say U.S. Treasury note? Why does it not say U.S. government note if they are the issuers of it? If they are the issuers of it, if they are the one who control it, why does it not say that? Why does the U.S. government own a debt to the Federal Reserve? Why do they own a debt to the Federal Reserve? That's just literally a part of a repo process. The Federal Reserve and government and corporations are always doing transactions back and forth to balance the flow of money in the economy. That's just called money management by the Federal Reserve. Why does the U.S. American president have to request the Federal Reserve to cut or increase interest rates? Why don't they just dictate it themselves? Why did Donald Trump have to demand or request the Federal Reserve to cut interest rates? Why didn't they just do it themselves if they're the ones who control it? If they're the ones who are the issuers? If they're the ones who dictate that? Oh yeah, because the government doesn't control that. If the government needs interest rates adjusted, they have to go to the feds. If the government needs more money to spend, they have to go to the feds. If there's an increase in money supply, it's coming from the feds. Every single note is a Federal Reserve note. Okay, then how come the Congress can't take back shit? They can't. When have you ever seen that happen in history? When have you ever seen that happen in history? You haven't. What you have seen happen in history is the central bank control all of that. Sorry, buddy. It's time we ignore this guy now because he's wrong right there. Federal Reserve note. Federal Reserve note. Okay? Federal Reserve note. This note is legal tender for public, debt, and private. My God. Federal Reserve. No, the central bank was privately created to work outside of the government and control the government. Because once you dictate and control the money supply, you control everything. That's why central banks are privatized. That's why the Federal Reserve was created by those billionaires 100 years ago to work outside of the government, to have more control than the government. That's why these are Federal Reserve notes. That's why this note is legal tender for all debts, public and private. Why does it say that? You caught it. You caught it. You caught it. You caught it this time. GJ, we're taking sells back below 151.200. It looks like this was the pullback if we break back below 0.200. It's not a conspiracy, it's fact. Yeah. No, I think we owned you. How come you're the only one who thinks you're right here? Usually, if you're the only, usually, if there's a huge audience and you're the only one who thinks they're right, there's a high probability you're wrong. You know what I mean? I'm not trying to knock your intelligence, but how come there's not a singular person in here who agreed with you? Not one singular person. So usually use some logic, all right? Maybe your thinking is a bit backwards. GJ, we're going to take sells at the break and retest below 0.200 again, because it looks like this was the pullback to take us back down for that 7 a.m. Eastern candle. Gold, you can't. Gold did a pretty solid reaction there. Remember, people said, "Oh, trend lines are trash." Hey, that was a pretty solid 20 pip reaction. GJ, we're gonna wait if we break below 0.200. I'm only sticking to the GJ and GU sell bias. UCAD, it's just doing a pullback right now. We're waiting for USD CAD buys above 1.2645. But obviously we have to wait for our ADP national employment data. Yeah, that's in still 45 minutes. 42 minutes. Yeah, I'm still answering questions and stuff. Any analysis, questions, charts you guys want to send. That was a good discussion though. We were talking about at least economic stuff, you know what I mean? Talking about fundamentals. It's just that guy really had it all backwards. Yeah, if you guys send me the TradingView code, I'll pull up your chart. Just send me the TradingView code. Yeah, USD CAD, we're taking buys above these 1 minute highs. Continuation moves, we'll get easily a 20 pip squeeze, especially with this. It's looking like buyer side liquidity generating in the market here with this bit of a consolidation zone and order block. Dollar's still very bullish. Once we break above here, bing, bing, bang. Who was Daniel Savage? There's no way that guy was Daniel Savage. Daniel Savage doesn't even know what the treasury or anything that is. Like, he doesn't know. There's no way that was Daniel Savage. Daniel Savage doesn't have a fucking clue. Federal Reserve, government, and taxes. No clue. GJ, okay, we got the break here on GJ below 0.200. I want to confirm that we don't engulf this little bearish push below 0.200 here, and we get some weaker bullish candle, bearish candle, and continuation down in this fashion. But I think it's gonna be. I think we're gonna see this move better play out at actual New York Open. So I think we should wait until New York Open for any further scalps now. Especially that we already called these three playing the GJ Sal's. But that's what we're probably gonna see. Yeah, economics and fundamentals, trading psychology, order flow of institutions is what runs the markets. Technicals is just how we read all that information and break it down in an easier fashion for us to understand. So when you bring both together, you can have a very strong understanding and confidence while you're trading the markets. You know what I mean? Mm-hmm. So let's wait. Let's wait on GJ. Even if it plays out, don't get any FOMO. Let's just wait until New York Open volume comes in now. Just because we've already called 3 sells here. As long as we stay below 0.200 here, it is going to drop. But I'd rather just get the volume coming in with New York session, to be honest. Gold, I don't know if anybody took the high risk, high reward gold sell we were talking about. Come on, yo. Come on. That was pretty on point. Where the hell is it? Where was that gold analysis we gave? Oh, right here. 1756 sell zone. That was pretty good. Yeah, right here. This guy's still here? What's he keep talking about libertarian narrative? This guy fucking mentally okay, yo? Fucking go away, Chico. Why are you still watching that? Go with your own narrative then. Fuck, man. Fucking annoying. This guy's fucking weird. Yo, but come on. That was a quick 30 pip sell. Anybody take that gold sell? That was perfect. Right at 1756 retest. Bang, bang. Nice reaction there. That was a good sell. Man said, are you scared now? Scared of what? Some guy named Chico Blanque in some disgusting fucking brown Fruit of Loom underwears sitting in his mom's basement? No, I'm not scared. I'm not scared of some guy named Chico with a fake fucking name. What's it? Yo, chat, what's this fucking guy talking about? Is this man okay? This guy talking about kill shot. Is this man mentally good? Now we're gonna have to watch the reactions accordingly here to see if we can see a double top here or any further rejection. If we break above, then obviously no more further sells. I have no clue what this man's talking about. Fucking kill shot. No clue. That was a good quick scalp though for gold for sure. Just with the reaction and rejections on the 1 minute there. Gold pays quick on scalps. It's been a fun stream. It's been a fun stream so far. It's been like 2 hours. 3 hours it's been already. Holy shit, man. I'm getting eyes burning a bit, but we still gotta wait till Yo, bro, I've been trying to ignore the Sean Carter guy, but he keeps asking. I thought if I ignore him, he'll stop fucking asking, Vespucci. But he keeps fucking asking. Bro, no, the volume's gonna be the same in the markets, man. The markets will always be here, okay? Shit, man. Why would GJ volume drop in 10 years? Doesn't make any sense. Fuck, man. This guy's... Come on, bro. Why would like market volume drop in 10 years? For what reason? I personally think ADP is still going to be pretty good, and it's going to bring US dollar strength. Sabusos, Paul. I was trying to ignore this guy. He kept copying and pasting the same question. Because I was like, man, this guy can't be serious with this question. Yeah, I need a protein shake. You're right, I need a protein shake. GBP USD, we're going to take a sell at the exact same sell zone we've been using. But we're probably going to get that sell with the ADP data in 30 more minutes. Alright? GJ did the little break and retest. I was personally not going to take the trade because I'm waiting for New York. But if you hyenas took it again, you almost got 10 pips here on GJ, 0.200 break. Yeah, don't forget, New York opens just in another 15 minutes, so we're going to be waiting for the pullbacks with New York open. I don't really block anybody because it's pretty funny entertainment too, you know what I mean? You're trying to flip your account from 20K to 1 to 2K? You're trying to crash your account? Or did you get that reversed? Mister, you're trying to take 20K to $1,000? Just take a gold trade with no stop loss and let it rock. Crash your account. Yo, these GJ scalps been feeding in and out quick, eh? 1 minute price action was pretty beauty. I just personally didn't want to take another trade because we already called 3 here, but the trade idea played out again. Any hyenas jump in that? Hyenas are having a good day today. Yeah, dollar strength. Dollar strength. I'm looking to play on UCAD buys above 1.2645. Yeah, GJ cells. We've been playing nice the last 3 hours. We've been playing the same cells. We played the same cells. Just this is private channel members. Remember I was telling you guys last night how I used to scalp, how I would play like the cells like the same bias 3-4 times to final. Remember the last Zoom session? This is literally an example of that. Sitting at the charts for 3 hours, 4 hours, right? Sticking to one bias, following the market sentiment, following the news headlines, following the technicals, and then grabbing your piece in and out, grabbing your piece in and out, grabbing your piece in and out. You know what I mean? This is exactly what I was talking about. I didn't play any bounces from the lows. I didn't play any of the buys from 0.200. We just stuck to the same sell bias, playing the Japanese yen strength, playing the weakness in the construction PMI data, playing the outflow and liquidity in UK equities. Right? Wait, don't sell UCAD yet if you're trying to crash your account, because it depends on the ADP data. If the ADP data is bad, then it's going to help your account. Because the main focus for dollar movement and why dollar pairs are ranging for the time being is because we're waiting for the ADP national private employment data. New York opens in 10 more minutes. Next set of GU cells is below 1.355 again. Euro USD, I don't know if we're going to get as deep of a pullback as I want here. But I guess we can take some continuation Euro USD cells down to 1.51 if we break these lows, which is a 20 pip range. And we have continued dollar strength if the ADP data at 8:15 a.m. is good. ADP is not going to impact GBP pairs, but it is going to impact market sentiment, like have an impact on Japanese yen in the short term if it's good data, which can weaken the Japanese yen just in a brief short-term impact. But it's not going to directly impact GBP pairs, you know what I mean? Yeah, this is a long stream. I'm feeling I need to get some air quick before New York open here. Then we're going to go then we're going to wait for the ADP data and some continuation moves. All right? Need a stretch. You guys do morning stretches, or you guys have any morning routines you do? Yeah, ADP will probably do a whipsaw, fake people out first. It's known to do that with the ADP data. What's your guys' morning routines you guys do? Besides jerk off. This No, you don't have any morning routine. You don't jerk, stretch, trade. Coffee? Oh, I'm not a coffee drinker. It's not that I don't like coffee. When I was 14 years old, I used to work at a Tim Hortons sweeping the floors. I don't know if you guys, Tim Hortons is a coffee shop in Canada. I used to work there sweeping the floors, and then and ever since then I hated the smell of coffee, like coffee beans, like all that shit. I just hated the smell of it. No, I don't usually stream this long. I woke up in the middle of the night at like 4:30 a.m. and I couldn't go back to sleep. Usually I start the stream at 7 a.m. Eastern and we run until like 9ish, but I could not go back to sleep. You know what I mean? Make sure you guys follow all the Capital Hungry resources, Capital Hungry YouTube page. Go through all these playlists and you'll learn as much as me. All these videos, look at all these videos. I got videos about working out stuff, personal development, motivation, 16 seconds, me just screaming at you in this video. You know what I mean? Talking to you about willpower, talking to you about maturity, embracing pressure, brotherhood and community. We got live market webinars, quick short fundamental recaps, educational webinars, technicals, fundamentals, psychology, everything. The free Capital Hungry Telegram analysis channel. The Capital Hungry News Twitter, where it's not as many news headlines as the private channel, but still. Or if you want to join the Capital Hungry private channel, where we do 5 daily New York scalping sessions a week. We're gonna introduce daily London sessions as well in the near future. We do a weekly recap webinar, Asian session, intraday market update, access to the news terminal, and so forth. You can go to capitalhungry.com. That's a monthly subscription, or just use all the free resources that are linked in the description, as well as here. Private channel is just a different beast, though. Private channel is just a different beast. The last member who joined the private channel said there's too much information in the private channel. So that's how you know how much content you get for $3 a day. When someone joins, how many people join a trading service and say, man, there's too much information here. There's too much to learn here. How often do you hear that? This new member just joined last night and he's like, man, there's way too much information in here. It's because we fucking study the markets. We study the markets every day. We're analyzing, trading, reading, dissecting. You know what I mean? 6 more minutes until New York Open coming up. We're still in our GJ short bias. Gold still rejecting 1756 for the time being, but obviously New York Open can do a price grab, and it's going to get a little bit messier when we see ADP data as well. Yeah. All right, yo, everybody, quick 5-minute break. I'm going to come back at New York Open. Then we're going to wait the 15 minutes for ADP. Then we're going to see if we can use ADP data to our advantage to take some gold trades and US dollar trades. All right, 5-minute washroom break. Please make sure you guys like, subscribe, jerk sesh. Please make sure you guys like, subscribe, turn post notifications on. All right. New York Open here. Let's zoom out, check these hourly candles across the board. GJ still nice and bearish here. Getting a bit of rejection at these 151 lows, but as long as we remain below 0.200, we have the potential to fill this range back down to 151 again. Safer sells would be continuations and breaks below 151 at this point. Gold new hourly candle. So the hourly is still looking pretty bullish, but this new hourly candle hasn't created any type of lower wick yet. So it does look like that if the ADP data is going to be good in 13 minutes, which I think it is, that this hourly candle can grab some liquidity, then end up flipping back bearish, coming back down to these low points as well. Right? And that ADP data is just in another like 10, 13 minutes until we get that, which I still think that's going to be pretty good data in my opinion and bring some short-term US dollar strength. Okay. GU, we're only going to take the sells if we come back below 1.356. Euro USD, if we break below 153 and US dollar continues strength. UCAD, we're only buying if the ADP data is good, dollar strength looks good, and we come above 1.2645. Otherwise, we're still going to be also looking for buys if we come to 1.26100. Right now, we're just having New York open up, grabbing some liquidity here, and we're primarily going to be waiting for that ADP data, of course. Stock market index had those short-lived scalps, but we're waiting for pullback to 34,140 sells and continuations down with the corrective structure on US 30 and outflow on equity markets. Dollar so far, the new hourly candle just opened up without an upper wick, and it's having a reaction at previous highs to the left, but it's still relatively bullish for the most part, which is a good sign here still. So yeah, still nice and bullish here. What the fuck is this? No, I'm gonna go to the gym after this. I take a little bit of glycerol before the gym. You guys know about that? Get a little bit extra pumper. Get a little bit extra big pump. I should do a stream at the gym one day. Oh, that'd be weird. Yeah, so no more further entries. We're gonna be waiting for this economic data release here, which we'll watch live, which is the ADP national employment figures. If it's above the prior of 374 and also above the poll of 428K, then that should bring some short-term US dollar strength. Should also decrease the demand as a precious metal safe haven, and make some bearish, make a nice little bearish downside move. And obviously, if the data is very bad, then we're not going to be looking for sells on gold. We're only going to be adapting to buys if we break back above 59,500. All right. Yeah, GJ looks like it could do a bit of a deeper pullback here, as we're getting a double bottom now at 151. So if we close above 0.200, there is the potential for some scalps to up to this 3.5 retest area, which is roughly 15 pips. But that's only if you get 1 minute candle closures above 0.200. Yeah, dollar's holding some nice strength, which is a good sign. We just need the ADP data to further supplement and confirm that. What's the date today? October 6th. We do have a Federal Reserve speaker at 9 a.m. Eastern, Bostic. So we got to keep an eye out for that, which he might reflect on some of the economic data as well. And also at 11:30, he's speaking again. And that's pretty much it. Yeah, we're just going to wait the 7 minutes. We'll see how this data is. We'll see if we can use it to our advantage. If we can, then we'll take another set of scalps. We've already probably called, the session's been almost going on for 4 hours. And we've already probably called like 4 GJ sell scalps, 2 GU sell scalps, the gold sell scalp, high risk, high reward. The first reaction we had here at the rejection of the trend line in 1756, that went for like 20-35 pips. GJ, these sell scalps we've been playing for the last 4 hours, from 151.5, 151.2. We have to see the economic data to confirm that. I don't want to say it's priced in. We are pushing up right now and showing some stronger bullish price action, but unless we break above 59.5 and the data is extremely poor, then I don't see us going up too crazy. If the ADP is very bad and we break above 59, then no problem. That's why I said we're just going to wait for any further entries after confirming how this data is looking. You know what I mean? So might as well just wait the next 5 more minutes pretty much. Patience. Bearish bias on gold is going to be, we're still going to be sticking to our bearish bias on gold if this ADP data is very good and 6 more minutes. If it's better than the prior, better than the Reuters poll, then gold should probably just make a quick little liquidity grab and then start to make its way back down, come below these lows and come back down, right? But that's only if this ADP private sector employment data is good. And also ADP isn't the most important. Non-farm payroll and employment data end of the week is what we're really going to be focusing on Friday. NFP day, NFP unemployment and wages data. Jobless claims on Thursday as well, but yeah. Yeah, 4-hour streams, the work ethic is the work ethic. Four more minutes. 1759.5 is a historical level based on quarterly, yearly, and monthly price points. EU's pulling back. Maybe we'll get that pullback. Yeah, gold's only going to follow these arrows if the ADP is really good. If it's not good, then we're going to take buys above 1760. So it's either we reject 1760 and start to come back below for sells if ADP is very good, better than pull, better than prior, or we're only going to take buys if we break above 1760 and the data is very bad. We'll use it to our advantage for some quick impulsive scalps. I personally think it's going to be decent, not terrible, but ADP is always a coin flip because it's data from the private sector. You know what I mean? GBP. Yeah, it's gonna have an impact on the Japanese yen short term, but nothing like drastic. Like if the data's really good, you'll probably see GJ retest like 0.500. Japanese pound. Oh, really good. 568,000. And follow the magic arrows on the dot. For now. No upper wick on the 15-minute candle. I told you guys it was going to be good data. You gotta love the magic yellow lines. It even went to the bottom of the yellow arrow. Okay, so this data is really good. 568,000 in the private sector, well above pull, well above prior. This should bring us some US dollar continuation strength here. This dollar candle is most likely going to end up flipping bullish here on the new hourly and going back up to these highs. And gold, as long as this candle closes bearish, the next one maybe does a retest continuation down, or breaks back below 51 area, continuation down, breaks below 53, and so forth. Right now, we just did a bit of a downside spike, but don't enter any further sells yet. GJ might go have a bit of a deeper retest as well, just with the market optimism possibly weakening the yen. GU, not too much of an impact. Euro USD, not too much of an impact either. So it's just so don't trade it yet because it's gonna do some whipsaw movements. If this candle closes significantly weaker and rejects below these price points, then most likely you're gonna see the next candle start to do something like this if it closes weaker. But I would wait for this 30-minute candle to close Let the whipsaw movements take place, and then dollar strength comes back into the scene, and you're good to go. Came up right to the key level. Yeah, still bouncing around at 1754, these order block lows. Once it breaks below there, it's a very clean drop and melt. But not the largest impact. It's not like impacting like a... How is the stickers and shit? It's not impacting like a NFP report, of course. But it is very good data. It's most likely gonna have dollar flip bullish here. UCAD buys above 2645. These plays about, in my opinion, for gold sells, GU sells, in Euro USD sells, and UCAD buys are probably going to play out after 9 a.m. Eastern, in my opinion. The new 4-hour candle. Or even going into the next 30 minutes. You know? Right now, it's just doing some whipsaw movements on the lower time frame. Nothing too crazy. Yeah, UCAD's just been going up and down, 15 pips ranging for so far. Nothing too crazy. I think UCAD can even come down to like 26100. Then it's going to continue up later in New York session. Right now, we're not seeing anything too crazy from the ADP impact. It was just a little bit of a blip. Nothing we could really execute on. Nothing for a safe trade to take. Not really clean price action on the lower time frame right now as well. We'll see how these 30-minute candles close across the board. GJ looks like it might give us a scalp number freaking 5 for 0.200 sells again if we break below. Holy man, I'm getting tired. We did a lot. We did full analysis on gold, GJ, GU, Euro USD, USD CAD, US 30, AUD USD. We talked about central banks. We talked about Federal Reserve. We used the UK construction PMI data at 4:30 a.m. Eastern to our advantage when we took the GJ sells. We just anticipated and predicted this data was going to be good. We called 4 GJ scalps through a 4-hour stream, 2 GU scalps for 15-20 pips. We called the gold sell scalp from 1756 down to 1754. It was a pretty fun time. What do you guys think? It's a pretty fun time. We did full higher time frame analysis, fundamentals, technicals. We did scalp analysis, called some live scalp trades. We looked at economic data reports. We looked at market sentiment. It was a pretty fun day. There's no rest for the wicked. Yeah, this NFP is probably going to be like, it's showing that the private sector is doing very well, but that's not always a direct indication of the NFP. You know what I mean? I think I did once earlier on. Alright everybody, I'm gonna go to the gym. We did like a 4-hour stream right now. It looks like US dollar strength should continue. I'm gonna go get ready for the gym and stuff. Thank you guys for your support. Thank you for coming to watch. Make sure you guys like, subscribe if you want streams like this more often. send a like to the stream. If you guys can do me a favor, when the stream is saved, make sure you comment on the saved stream. It helps with the YouTube algorithm. You know what I mean? I'll see you guys next time.